All right, welcome to the weekly prep video for the week of October 6th to the 10th. In this video, we'll be going over the action over the past week of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week like we do with every video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the indexes and the NASDAQ, another great week in the market overall, up 1.2%. A little bit of weakness on Friday, down 0.4%. Sell off kind of later in the day, but still closed over the 5-day moving average. Not really doing anything wrong at this point. The one thing that I will point out is it feels like we have entered the acceleration portion of this uptrend where we test the 50-day moving average on September 2nd. That gets supported. Then we come in, basically test the 20-day moving average on September 25th sell off. That got supported. Gap down on what was that, Wednesday into the 10-day moving average, or Tuesday into the 10-day moving average with the government shutdown. That got supported. And then as of now, Friday's little pullback to the 5-day moving average got supported. And that's a market that you want to be playing on the long side. You want to be playing accelerated moves to the upside. But once accelerated moves snap and we get the momentum kind of turning to the other side, they don't tend to just trade sideways and consolidate in a quiet manner. That same acceleration to the upside, we're going to see, or likely to see on the downside. So again, we want to play momentum while it's in the market, but after we see momentum dry up or momentum snap to the other way, it's time to take a step back, take a lot of profit, take some positioning off the table, and just be prepared for a real correction, one that we have not had for multiple months. This has been an unbelievable run in the market from April low up until now. So just be careful with that around the corner. S&P 500, great action this week, up 1.1%. Two tight closes over the 5-day moving average. Still think that this has room to run to the upside, but we'll see if a close under the 5-day moving average would be like the first warning sign, or if we get an unfilled gap down, that's another sign of a potential trend change. Until that happens, the trend is up. IWO, this is the growth stocks of the Russell 2000. New 52-week high, not quite an all-time high. If we go back to February of 2021, we're still, what is that, about 5% or so away from that. But nice action overall. We had a test of the 20-day moving average on September 25th, came in, put in a higher low, broke through that on Thursday, and then followed through on Friday. We did close a little bit lower in the range, but again, as long as we don't close under the 5-day and like accelerate to the downside, this is still a strong uptrend in a strong market. ARKK, another kind of ETF that I use to determine whether it's a risk on or risk off market. If this is above a rising 20-day EMA, it's a risk on market. And we had a really nice consolidation in July from July 21st, basically to the breakout on September 11th. And from that point, it's been a really nice uptrend. First test of the 20-day moving average got supported. On Friday, little shakeout to the 5-day support gap that bounced there as well. So as long as this is over the 20-day and the 10-day, this is a very strong market to be playing in. Another good sign of risk on market is Bitcoin acting well. And this actually wasn't acting super well the prior week. We came back down into the previous lows. We had this false breakout on August 13th. A lot of weakness in crypto. And then with the government shutdown, we saw crypto take control and really accelerate to the upside. Bitcoin basically getting to all-time highs. What it does over the weekend, we'll see. I'm filming this on a Friday night. But it's usually not a risk-off sign when Bitcoin is making new all-time highs. Getting into the liquid leaders, we'll just sort this by price percent change for the week. And BE, the stock that seems to always go up, is up another 28% this week. It did have some weakness off the top. We had basically a 2.5-day sell-off into the 20-day moving average and then a gap down below that. That did get supported at a support gap right around 62.80. And from there, it was basically straight up, higher highs, higher lows, all the way up into new highs. A little consolidation action on Thursday and Friday, but still closed at a new all-time high on Friday, up 2.6%. Robinhood up 22.8 or 22% this week. Phenomenal action Monday and Tuesday. Wednesday, Thursday, Friday, not bad action either. Just continues to trend over that rising 5-day moving average. I like the little consolidation day on Wednesday on lower volume over the 5-day moving average, followed by an unfilled gap up. You see that in really strong moves in liquid leaders. NBIS up 18.8% this week. Very similar price action where we consolidated, came into a support gap on Wednesday, undercut and reclaimed that area, then gapped up on Thursday. Higher highs, higher lows on Friday. Phenomenal action out of NBIS. LEU had a new all-time high and then closed a little bit red on Friday, down 1.6%, lower than the average volume. Red candle close over the 5-day moving average, just like I covered with Hood and NBIS. That does not really give me any reason to think that the trend is going to be changing until we close below today's lows. The trend seems up. It's in the right theme. We're in the right market for this to continue higher. KTOS also made a new all-time high on Friday and a new closing high. Basically a frozen rope over the 5-day moving average. We had that one gap down on September 25th that got supported at the 10-day, followed it up with 3 unfilled gaps to the upside. Just extremely strong action here. Alibaba, a lot of rotation into Chinese equities, and I don't think that that's going to stop anytime soon. We may see consolidation in them because, as you're looking at this chart, we are quite extended in the short term. This has not had a single close under the 5-day EMA since the secondary offering got bought back up over the high volume close from earnings at 135. It's now trading at 188. Just extremely strong action. And it's not just Alibaba. Many Chinese equities are acting very strong. APP, a little bit of a rounded top here, pulling into the 10-day moving average and the support gap on lower volume. We'll see if we can get supported there on Monday. Otherwise, this does kind of look like it might need more time to base, come into the 20-day or even a little bit below. This has gone basically straight up from earnings. We had this like little dip back to the 20-day moving average, but from $400 up to $740 in just like 5 weeks, a little extended, probably deserves a rest here. Google consolidating between a support gap, the 20-day moving average on the downside, and then a resistance gap, the 5 and the 10-day moving average above it. Which direction this breaks is probably going to give us some good feedback for the overall market. So if we can close over the resistance gap and the 5 and the 10-day moving average, chances are momentum is still strong in the market and will continue to climb. If we close below the 20-day and the support gap, that's more evidence that the market's just a little extended. We're running a little bit later in the cycle and we need time to consolidate. And then Tesla back to back pretty ugly days after they announced their delivery numbers, which they beat expectations on. So a sell the news event on Thursday, pre-market, I think this was at like almost $480, but then sold off, opened on the high, closed on the low. On Friday, we gapped up slightly over the 5-day moving average, then sold off the rest of the day. We did bounce exactly on a support gap, undercut and reclaim just above the 20-day moving average. So that would have been a tough place to put on new exposure just because it happened later in the day instead of the first 90 minutes where support gap undercuts tend to do a little bit better. So that's a spot that I'll be watching for come next week. But overall, as long as we close over that area, I think this was just people kind of buying into the news a little bit too late. Like the stock ran from 350 up to 475, $480 in just like 3 weeks. So anyone who is buying up here after this kind of extended move that they were just asking to get shaken out, we got a nice 2-day shakeout. Let's now see if volatility can contract. We can build some higher lows here and then start trending back higher. Getting into the industry ETFs, we'll sort this by price percent change. First is MSOS. This is the cannabis ETF, and basically all the price action was on Monday, where this was up 28%. From there, just trading sideways, consolidating after that move, every single close over the 5-day moving average. This really is looking solid at this point, and it's just waiting on the news of rescheduling. So definitely a news-driven theme, which is a little bit harder to trade, maybe size down, wait for that news to come out, then trade to the upside. Um, don't know if you want to get like too heavily positioned and then just continue to wait and wait and wait for the news. Timing news is always tricky. So if you're going to do it, try to do it with a little bit smaller size or in very, very smart spots in the stock. Blockchain ETF, new all-time highs on Friday, up 9.2% this week, basically straight up after the test of the 20-day moving average with three gap ups. Very strong price action there. XLV, the healthcare ETF, huge volume coming in here. We had this ugly close under the 50-day moving average on September 25th, followed by a gap up. That combination, ugly close under a key moving average, unfilled gap up, is how you reignite uptrends. And you could just see how powerful that was. Massive volume coming in here Tuesday, Wednesday, Thursday, Friday. Now we did uppercut and fail at a resistance gap up top, and the 200-day is just flattening out now. So we should expect a lot of volatility, less linear moves after this has already kind of made a 4 or 5 day move in a row. So some chop here, letting the moving average catches up would be completely healthy. TAN, this is the solar ETF, up 5.9% this week. Nice gap up on Thursday, consolidation bar on Friday. Pull back to the 5-day and support gap, completely fine. Even a breakout retest like below the 10-day, let the 20-day moving average catch up to this gap zone. That'd be a great spot to try some of the solar names. XME, metal and mining ETF, frozen rope action, just riding that 5-day moving average higher on extensions. Any pullback getting supported at the 10-day moving average. Definitely in the parabolic phase of the move, but those parabolic moves, they tend to kind of blow off with massive, massive moves to the upside. So we either get massive volume coming in and massive extensions with the daily bars to the upside, or we'll get some unfilled gaps downward, and that'll mark the end of that uptrend. XBI, biotech ETF, huge volume coming in, very similar with the healthcare ETF over the last 6 days, basically straight up since the test of the 10-day EMA on September 25th. I did sell my LABU position on Friday into strength for, I think it was 68%, 70%, whatever 86 to 103 was. Very good trade, just a little extended. We'll look to put that back on after some consolidation. SMH semiconductor ETF made new all-time highs on Friday, closed a little bit lower in the range, down 0.5%. But I mean, not doing anything wrong here. Plenty of space to the 5-day moving average. So even coming back to that would be fine. Let the 10-day moving average catch up to that zone. ROBO, the robotics ETF, made a new 52-week high. I don't think it's an all-time high. Yeah, not quite an all-time high, but getting there. Another sign that we're in a risk-on market. KWEB, Chinese Internet ETF. This is kind of going back to Alibaba. If we go to a weekly chart here, we are just breaking out of a 3.5 year base. From 2022 up until now, just broke out of that 4 weeks ago. We had 2 weeks of extension, consolidation week, and then follow through this week to the upside. Phenomenal action here. Chinese equities are not one to ignore, especially if American stocks are getting extended. That money's going to have to go somewhere. And my guess is it'll go into Chinese equities. NLR, nuclear and uranium theme, new all-time high on Friday. Huge volume coming in on all these expansion bars to the upside. Exactly what you want to see if you're long the name. The theme still has room to the upside. We covered LEU looking great. OKLO looks solid. A lot of the uranium names look really good as well. So again, until you close under the 20-day moving average, the trend is up. GDX Gold Miners is next. Little consolidation this week, even though it's up another 3.2%. Shakeout to the 10-day moving average on Thursday was pretty violent intraday. but then we didn't follow through to the downside. We undercut the 10-day and support gap, rallied back over all the key moving averages, and then had a really tight day on Friday. So not doing anything wrong. ITB, Home Builders ETF, has been just grinding at this 50-day moving average basically all week, then had a little bit of strength on Friday, up 0.9%, closed back over the 20-day moving average. Now let's see if we can kind of build a higher low on a pullback, or if do we accelerate up, test this gap zone, and then put in the higher low. We'll see. IYZ, this is the telecommunications ETF, new all-time high on Friday, great action. ITA, aerospace and defense, new all-time high on Friday, new all-time closing high as well. Really phenomenal action here. CIBR, cybersecurity, made new all-time highs on Friday, then closed a little bit weaker. Still over the 5-day moving average, so you can't complain too much there. If we do need time to consolidate, pulling back into the support gap and the 20-day moving average would still be another higher low overall in the chart. So that would be the spot that I would watch on any weakness. XLB, this is the materials ETF. Nice bounce right around the 200-day moving average from last week. Rallied up into the 50-day. So far, this is just a lower high until we can really push that level. But it is good to see some sort of response to a key moving average. Let's see if we can get over that spot next week. IYT, this is the transportation ETF. Up 0.7, 0.8% this week, with a little gap up on Friday. We did close a little bit lower in the range, but a lot of stocks did, with the NASDAQ red. This up 0.7%, showing some good relative strength on Friday. XRT, this is the retail ETF. Very similar action, like closed right near the low of the day, but did have a gap up, was positive, up about 0.25% on Friday, and overall the key moving averages. Ideally, we can close over this resistance gap, then build another higher low before we can get going here. XLP, one of the groups that I'm most worried about. This really zooming out looks like a stage 4 downtrend. We had our stage 2 uptrend, a big messy stage 3 top, and now we've lost all the key moving averages. All the moving averages are now in the right order, with, well, the wrong order, with the 200-day, then the 50-day, then the 20, the 10, the 5. Today we uppercut and failed at the 10-day moving average and the resistance gap, and then closed under the 5-day. Follow through to the downside, and this is a potential short. IGV, basically flat on the week, consolidating all week, closed under the 10-day moving average. Palantir is a big holding of this ETF, and Palantir stopped me out on Friday today. Looked like it was ready to take out new highs. A little choppy action through there. Like I bought this on Tuesday or Wednesday. I forget which. Either way, got stopped out of this. A really ugly bar, down 7.5%. Closed right at the earnings close, right around that spot. So we'll see if we can get any reaction on Monday. Maybe it needs to test the 50-day moving average and the gap zone at 168. But one of the previous liquid leaders that's starting to show some weakness, we already had the 2-day sell off of Tesla. Palantir starting to show some weakness here. So we'll see if IGV can break to the upside or the downside. This will be a great test to see if momentum stays in the market or not. XLF, this is the financial ETF, was pretty worried about this after, what was this? October 1st, close under the 5, the 10, the 20-day moving average on the gap down. Then we followed through into the 50-day moving average, and things were looking pretty bleak here. We were reversed, closed over that area, gapped up the next day, closed over the 5, the 10, the 20-day. We did uppercut and fail at the resistance gap area, so ideally we can close over that as soon as possible. But I do like, again, a test of the 50-day moving average that found buying support. So at least for now, the trend is still up, even though it's pretty choppy. We don't want to see the market lose financials. Financials, like if they get into a downtrend, it'll put some real pressure on the rest of the market. So not what we want to see. XLY, lower highs, lower lows, close under the 20-day moving average. This is the consumer discretionary ETF. Not one that I spend too much time on, but obviously the more ETFs over rising 20-day moving averages, the stronger the market is. FDN, a little uppercut and fail of the resistance gap at the 5-day moving average. Meta is a big stock in this one. And going to Meta's chart, you can see I haven't even looked at it in a while because it's just been so weak. Recently, we rallied up to the recent highs, failed at that resistance gap, lost the closing price from their earnings gap up, then lost the 20-day moving average, then lost the gap down through the 50-day moving average. We have another unfilled gap down, another resistance gap just recently. So it definitely feels like something's wrong at Meta. 50 days now starting to decline. And then Amazon is another mega cap stock that just not working out very well. Actually, I'll save that. I think that's a short setup that I'm covering, but just another mega cap stock that not looking great, rallied up into recent highs, gap down, lost the 20-day moving average, then lost the 50-day, just went sideways while the indexes went higher. Tried to get going on Friday, reversed, closed at the low of the day. So we are starting to see some cracks in this market while the indexes are in that acceleration phase, which is a sign like that's how markets top, just short term at least, before real corrections. PEJ, a little bit of weakness here. Bearish engulfing candle on Friday, down 2.8%, 2.9% for the week, under a declining 20-day moving average at this point. This is the leisure and entertainment ETF. Not a great sign overall. Multiple unfilled gap downs. And then XLE, the energy ETF. I like what we did here today, where we closed under the 20-day moving average with an ugly close, followed it up with a unfilled gap up. I wish we closed over the 5, the 10, and the 20. Like we closed really weak in this range. But this is at least a start. We'll see if this is just another higher low overall as we build out this base. Before we get into the long and short setups, we'll go over some positioning. First is NAAIM. This is the active investors exposure index, usually over 95%. And I start to get pretty concerned because if everyone's already long, who else is left to buy in the market? And while the indexes are marching at highs, continuously at highs, we've actually seen exposure level drop over the last couple weeks. From August 20th, we were at 98%, and that's when I was getting pretty concerned. And we had pretty choppy action for about 3 weeks until exposure dropped to 81. And then from that point on, the market got very easy. The rest of September, beginning of October, and now we're back at 80. So we're not overbought by any means here. But we are starting to see like the accelerated moves, a lot of like super tight, super risk on type stocks make some powerful moves to the upside, while some mega cap stocks are breaking down. Some previous leaders are starting to show some weakness. So kind of a mixed bag here. And when there's a mixed bag, well, always price is king. But when there's a mixed bag, I will always just defer to price action and see how the stocks that I own, how they're acting. We don't have COT data this week because of the government shutdown, so we'll just have to stick with the NAIM exposure levels. Getting into the long setups, we'll cover 9. The first one, Tesla, and we'll go most liquid to least liquid. First one is Tesla. Kind of covered it on the leaders list. Just watching for another test of that support gap, the 20-day moving average. Ideally, it doesn't happen on Monday. Like it would be nice to see like a little bit of a rally, and then anyone who like bought again a little bit later in that rally gets shaken out with a pretty violent move back to that 20-day moving average. But that 417 spot, that's the spot that I would look to add on to my position. CRWV, nice consolidation here between a resistance gap up top and a support gap below. Today came into the 10-day moving average and bounced right at that area. Two different ways to play this: an undercut and reclaim of today's low and the 10-day. That's the spot that I'm most interested in. Or through like the today's high, yesterday's high. That's also another spot if you're trying to play on momentum. If that's the case, I would put my stop at whatever the low of the day is, just given where we're at in the market cycle. Like I want traction right away. I don't want to have to sit with anything. I don't want to have wide stops on any new positions. If we get that undercut and reclaim, then I would be a little bit more comfortable sizing it up because I could keep my stop at whatever the low of the day is, and that would be pretty tight. OPEN, this is another great sign, well, great indicator for the market, whether we're going to have momentum continue or momentum dry up. This name went from 52 cents up to $10.50, pulled into the 20-day moving average, rallied back up, put in 3 days of a higher low, and tried to get going on Friday through Thursday's high through the 5 and the 10-day moving average, but eventually squatted. Now, just because the stock squatted doesn't mean that it can't just like rocket back higher. Speaking of rocket, Rocket Lab was a great example of this, where we got tight near a key moving average. We tried to get going. This was the day I bought it on October 1st. It squatted, didn't stop me out. And then the next day we got a unfilled gap up, 9.4%, followed by another 7% move. So really good trade for everyone in the Market Pulse Discord there. And something that I've taken away the last maybe 2 years or so is squats by themselves, not a bad thing in the stocks that you're in until they follow through to the downside. So I'll be looking for a break through Thursday's high, which is 833 as the entry. Stop would be Friday's low, the 20-day moving average, just under $8 there. BMNR, with crypto starting to really show some relative strength, this is one that could have a nice move to the upside. With this, I would look for like some weakness on Monday and then take out of Friday's high, which would be 57.82 as the entry. Stop would be the low of the day, whatever that is. Again, we're at the tail end of a momentum market. You can play those tail ends. You just have to shorten up your time frame. Don't allow any trades to start working against you, any new trades to start working against you. But the last couple of days of a momentum move, of an accelerated move, can be very profitable if you play them right. HIMS, I was interested in this coming into the 10-day. It just blew right through the 10-day moving average in the gap zone. Really ugly close under the 20-day moving average, close to the 50-day. I forget what stock I was talking about earlier, but we got an ugly close. Now I'm looking for an unfilled gap up on Monday, and then an opening range break just on a 5 minute on the 5 minute candle. That would be the entry. Stop would be today's low. Otherwise, if we close under the 50-day moving average, I'll still look at this kind of the same way as like ugly close, unfilled gap up can reignite the trend. But when you have a base like this that keeps getting supported at the 200-day moving average, then you get supported at the 50-day. This is a name that can make some pretty drastic moves, like from $24 up to $64 in like what, 3 weeks here. Really big base. Maybe it's not quite ready, but we'll be looking for an unfilled gap up as the entry on Monday. Riot, this was on the watch list coming into Friday, went through the pivot and then squatted. So very similar to, what was it, Open Door. The squat doesn't mean that the setup is invalid. Just looking for a breakthrough Thursday's high. That would be 1925 as the entry. Stop would be today's low. And zooming out on this, we are just at the top of a multi-year base here. Stocks that break out of multi-year bases tend to go on pretty drastic moves. It's the right theme as well, kind of being in that crypto slash data center related theme. First Solar, this is a solar stock that we covered. Looking for a pullback under the 10-day moving average into the support gap area around 220 as a potential entry. Now, TAN is a little extended in the short term, so as that pulls in, I expect a pullback in this name and with SEDG, which we'll cover in a second here. Really, if it pulls into this 20-day moving average, that's an even better spot to watch, but I will have alerts right around that 220 area and the support gap below the 10-day. Let me jump to SEDG just because it's another solar name. A little bit of weakness. We had a reversal on September 29th, then lower high, lost in the 5 and 10-day moving average with weakness on Friday, down 4.5%. Just looking for another undercut and reclaim of this kind of pullback low, 20-day moving average, and a breakout retest area right around 35.50 as the entry. Then finally on the long side, we have BITF. Huge volume coming in from 130 up to $3.60. Pulled back into the 10-day, had an ugly close followed by an unfilled gap up, reigniting the uptrend. Now just looking for a higher low pullback into the 10-day moving average, right around that 280 area with the gap zone as the potential entry. And finally, we have our short setups. First one is MSTR. I did add to my short on this on Friday. Um, I started the short position back, where was this? On August 13th. Took some off into the weakness. We had a rally back up to the declining 200-day moving average and the resistance gap. Failed at that area before, had an accelerated move lower. In hindsight, obviously, I should have taken more off. I did not expect Bitcoin to just rip right into new all-time highs. Um, but because I took some off into profit, it wasn't the worst thing in the world. Just sat with that, and then added a piece back on Friday. Perfect uppercut and fail of the resistance gap of the 50 and the 200-day moving average. The 200 days sloping down, the 50 days sloping down. This has showed relative weakness compared to Bitcoin all year long. Um, if Bitcoin goes on just a monster run, this is going to stop me out, obviously. But just another test of that resistance gap high zone would be the short. And then I would just use like a 3 or 4% stop on this. SNDK, now we're looking at some not basically parabolic shorts. Um, this name from $42 up to $130 in like 7 weeks. Phenomenal action overall, like something that you should study to trade on the long side. Pulled in the 10-day moving average, got supported right at that support gap, went from 93 up to 140. That's the type of market that we're in. But tons of volume coming in as we get extended here. Friday, we had a pretty weak close. Now, this is just a squat until we get follow through to the downside. All this is another day where it's up 3.4%. We can get another gap up just like we got the past 2 days. But what I would be looking for is either like a gap up and then a green to red move as the short stop would be whatever the high is. Or if we do gap down, then just an opening range break to the downside, stop at today's close. CIFR, another high flying name. This could have been a double top short setup on Friday. One thing that makes me want to short this is we had the highest volume ever on September 25th when it was down 17.5%. Because the market itself has been so strong, it kind of consolidated and went higher. But it took out the highs and then immediately reversed there, closing lower in the range. It did close up 6.4%, but very similar to SNDK. This is one that I want to take on weakness through today's low as the entry, stop, whatever tomorrow's or Monday's high is. Royal Caribbean, this was probably shortable today as it came into the 10-day moving average just on the open. But that spot is what I'll be watching for. Just another rally to the 323 area. This had rallied up into new all-time highs, immediately failed there, rallied up into the resistance gap, failed again, lost the 20-day, lost the 50-day. Two attempts over the 50-day, both failed. And again, like anything that the average person is spending money on is starting to break down in a real way. So those are the types of stocks that I want to be short. Speaking of which, Avis budget, this gap down earlier on earnings down, what was this, 15%, then basically went sideways while the market ripped higher. Tried again over the 50-day moving average on October 1st, shakeout day on Thursday, and then just distribution on Friday down another 3.2%. With this, would want to see a little rally back up to the 20-day moving average, right around that 158 spot. So then I can manage my risk with a stop over the 50-day moving average. DAVE, Dave Software. I think kind of similar to the open door setup. I think this could be a long or a short, depending on which way we break. I mean, this has been just a monster stock from $4.80 all the way up to $280 over the last 2.5 years. Maybe it's time for like true consolidation or true basing here. So far, this is just higher low, higher low, higher low, and another higher low. So if the market is going to continue higher and this breaks through this kind of 3-day pivot, that's a good entry on the long side. You could put your stop at Friday's low and then just play that momentum to the upside. But if we get like an uppercut and failure of the 50-day moving average, and then we take out today's close, that's where I would look to short it versus whatever the day's high is. A gap down opening range break, you could also short versus today's high. Um, just yeah, a name that's already made its big move. Starting like this is definitely a later stage base. You have like stage one base, stage two, stage three, stage four. So we'll see if that breaks to the upside or the downside. Either way, we'll use that as market feedback. Root Insurance, another name that went on a drastic move, like $7 up to $178. Lost the 200-day moving average on earnings, down 26%. Had a little rally up to a declining 50-day, got sold off there. When things fail at a declining 50-day, like it did once, twice, three times, that's a sign that institutions are liquidating positions and the run is just over in the name. We had another gap down on September 25th, tried to rally over that, failed, and then bearish engulfing candle on big volume on Friday, down 4.6%. You could take it like through today's low. I would want to see just like a couple more days rally into a declining 10-day moving average so then I could get my stop over the 20-day and the resistance gap. But I think this is pretty much toast. And finally, QMCO. We've seen the quantum names go crazy. RGTI, very strong. Does not feel like it's done. So actually, let's just go through these. The quantum names. RGTI, phenomenal price action. Pulled into just the 10-day moving average after its highs. Got supported at that support gap. Another 18% day, another 13% day. Then you have the second strongest one, IONQ. Huge move up, pulled back not to the 10-day, but pulled back to the 20-day, got supported, gap up, 10% position or 10% move, 5% move, has not made new highs. You have QUBT, which is gotten going on Friday. This was up 23%. Uppercut and failure of the resistance gap here. And then you have QMCO, which is not even a quantum name. It it has quantum in the name, Quantum Corporation, but they make cassette tapes. That's all they do. That's just the market that we're in. You have quantum in your name, you'll go up 100%. As momentum snaps, these are the names that I'm going to be focused on first, then RGTI, well, then QUBT, then IONQ, then RGTI as they roll over. But you want to short the weakest names, not the strongest names. Little uppercut and failure of the resistance gap on Friday. That's the spot I'll be looking for. Another lower high overall, just right around $12. Uppercut and fail there as the short. Stop would be the high of the day. So that's going to be the weekly prep video for October 6th to the 10th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great weekend, and I'll see you guys in Monday's video.